Hey, Bobby Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P as well as XLK, Apple and Microsoft, AMD, Nvidia and Micron, Taiwan Semis, XLV, XLE, and ExxonMobil, Oxy, Boeing, Airline ETF, Jets, Camping World, Disney, Netflix and Amazon, Tesla, Li Auto, Xpeng and NEO, QCLN, Enphase Energy, First Solar, PSJ, Beyond Meat, Bitcoin, and Ethereum. So let's get right into it. Does anyone know why the stock market is down? I had someone text me and say it was because of the interest rates. Someone said it was because of Russia. Someone said it's because of China. No one said that it was what SpotGamma said. So let's look at what SpotGamma said on January 14th. They said the deep January options expiration is going to be a pretty big deal. So this was written a week ago, and they said the event is that next Friday, on January 21st, today, deep in the money calls worth billions of dollars are set to expire. Deep in the money calls are unique because they are valued as being essentially equivalent to shares of stock referred to as a Delta 1 position. Most of these calls were purchased in 2021 and have participated in the massive stock rally over the last year. So this is kind of what I want to show, the potential impact. So they kind of have a similar view that I do when analyzing the options market. They say the potential impact is that regardless of these investors' individual strategies, at SpotGamma, our models indicate that the net options delta set to expire on Friday, January 21st, today, is over $125 billion. So their base case is that the expiration of these deep in the money calls are a catalyst for volatility. That is expanded stock price movement, higher or lower. The ability to assign a direction to this volatility is dependent on how one assumes these investors are positioned. So using the options market to kind of figure out when there's going to be a big move and when it's going to be kind of quiet is a very important thing to take note of. And I think that one interesting idea is that we just had a pretty important options expiration as indicated by this giant blue bar right here. So this was written a week ago, and I just wanted to share it, and I'll leave the link into the description of this video just because it might be another reason, maybe a better reason than most retail traders are getting for why there's a lot of volatility in the market right now. So I always talk about the quad witching dates, March, September, June, and December being very important dates. SpotGamma kind of pointed out a week ago that today was a very important date, that first major option expiration of the year. So here is the S&P. I believe that this is a wave 1 and an ABC correction ending wave 2 between the 61.8 and 78.6% fib. So we did go below this low of 448. If I use Microsoft and I use other kind of charts just in case one stop gets hit, I still believe that this is a 1, 2, 3, 4, 5 waves impulse. And now we are between the 61.8 to 78.6% fib. So if this wave 1 low holds just for the S&P of 426, then we can reverse. This is a wave 1 and a wave 2. And the minimum wave 3 target would be 490 before a shallow wave 4 and a wave 5 higher. XLK is a very kind of pretty picture of what this could look like. And if we see that from 10-4 to 1-4, exactly 2 months, if that's all wave 1, then wave 3 is usually bigger, stronger, and faster than the length of wave 1 placed at the wave 2 low. And what we're kind of talking about, what we've kind of mentioned, especially yesterday, was that lines up almost perfectly with the past 50, 60 years of midterm election seasonality. And what we've kind of seen, what may be a good sign, is that the kind of bearishness in January that usually happens in a midterm year before a melt up into March and April has at least partially played out. So I still think we're right here. I think that the Elliott wave supports that SPY and XLK will hold those October lows, and we can see a melt up into March and April. And then what we could see is when the real bear market starts. I don't think that this is the real bear market. I think that this is the last bear trap, or one of them at least, before a pretty substantial melt up. And I think that the fact that this was a huge option expiration date, the kid at the bus stop knows why the market's going to crash. I actually got a text saying that the market was going to crash because of rates. And that actually was a few days ago. So very interesting. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2 at the 78.6% fib. So the length of wave 1 placed at the wave 2 low can take SPY to 490. On XLK, it's a very similar idea. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2, where the length of wave A, place of the wave B high, is where wave C ends. So I think that this is a pretty cool chart for bulls, is that this is an ABC correction where the length of wave A, place of the wave B high, is where wave C is ending between the 61.8 and 78.6% fib. So if we're above 146, the length of wave 1, place of the wave 2 low, says in a few months, we can see XLK hit 184 before a shallow wave 4 and a wave 5 higher. So generally speaking, for this kind of tech melt up, I'm looking for very aggressively, this to kind of play out by the March quad witching date. More conservatively, I expect it will happen by the June quad witching date, most likely somewhere in between those dates. I think right now, if XLK is above 146, there's a few charts like Apple and Nvidia and Microsoft and AMD that says that shorting tech right now is a pretty bad idea. So if we're above 146, this could certainly be this deep, scary wave 2 before a dramatic wave 3. So that's just something I'm thinking about. Here is Apple. Apple's a good reason to not short the stock market or big tech. I believe that this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So the most important count is just within the cycle from the May low, that this is a wave 1 and a wave 2. Wave 3 goes past the 161.8% extension of wave 1. I believe now we're ending wave 4 at or near the 50% retracement. So Apple's getting close to 155. I think XLK holding 146 is going to be an important level for Apple. It's about 20% of XLK with Microsoft. I think Apple's going to go on a wave 5 higher. The minimum wave 5 target would be the length of wave 1, place at the wave 4 low. More aggressively, it'll be the length of wave 3, place at the wave 4 low. That can take Apple up to 208. If it were very aggressive, more conservatively, it'll take Apple up to 196. So that's Apple. I want to see it hold above 155, but more importantly, I want to see XLK hold 146. There's a few nice ETFs like XLV that kind of just show if we hold above the October low, then there's a lot of upside. For Microsoft, this is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2 at the 78.6% fib, just like XLK. That shouldn't be a surprise because Microsoft is about 20% of XLK. This could be a wave 1 and a wave 2. The length of wave 1, place of the wave 2 low, says that Microsoft can go all the way up to 364, and that would be a conservative wave 3 target before a shallow wave 4 and a wave 5 higher. So very similar to XLK. I want to see this wave 1 low of 280 not get broken. I want to see XLK above 146. AMD and Nvidia kind of show a deeper wave 4. Normally a wave 4, we look for it to end between the 50 to 38.2% fib. For a higher beta stock, a lot of growth stocks, a lot of, sexy tech stocks, deeper wave 4s are a little more common. And I think that this is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2, and that we're within a large wave 3 in black. So this is wave 1 of wave 3, and this is wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. We're between the 61.8 and 78.6% fib. So very kind of tight. I want to see 113 not get broken. A little wider would be this low of about 99. But I want to see 113 not get broken. 99 would definitely be an invalidation for a wave 4. It would also be an invalidation for if this was another wave 1 and another wave 2. But this does look like an A, B, C correction where the length of wave A, place of the wave B high is where wave C is ending. So if AMD reverses with XLK with Microsoft, the length of wave 3, place of the wave 4 low, and take it up to 182, and that lines up very similar with other semiconductor names. So here is Nvidia, and I think that there is probably a good objection to this Nvidia account. We'll get to that in a second. I think this is a wave 1 and a wave 2. This is a large wave 3 in black. So kind of similar to AMD, I believe this is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3, and now we're having this deep A, B, C correction between the 61.8 and 78.6% fib. So an astute wave theorist is going to say, why is this a wave 4? We're at the 78.6% fib. I think it's important to remember that in the short term, we don't really need to make the argument that this is a nest and that Nvidia is going to explode. In the short term, the most conservative view is that we're going to hold above 195. If that happens, then I believe that this is a wave 3. And one of the big reasons I think that this is a wave 3 is because it goes well past the 161.8% extension of wave 1. So this is most likely a wave 3 and an ABC correction ending wave 4. near 195. If we're above 195, the length of wave 3 placed at the wave 4 low can take Nvidia up to about 380. Now, if it goes past 380 significantly, we would have to consider the idea that this is another wave 1 or another wave 2, or that this is some type of larger degree count. It looks something like this, where this is a wave 1 and wave 2. This is a wave 3 and a wave 4. So wave 5 would be the length of one of these rallies, either the length of this wave 1 rally or the length of this wave 3 rally. But all that really matters right now is that we hold above 195. The AMD setup plays out, the XLK setup plays out, and all of these stocks should be going to new highs, in my opinion. So that's Nvidia, that's AMD. Here is Micron. It's kind of a similar idea. I think Micron's kind of a good piece of evidence that people calling for a crash based on Elliott wave, right? That doesn't quite make sense. Maybe if you look at SPY, maybe if you look at QQQ, but if you look at a lot of kind of sister stocks, a lot of important tech stocks, we just made a new high a couple weeks ago for Micron, and this is kind of a marginal new high. So let's just kind of go over the bear count from an Elliott wave perspective. If you're really calling for a crash, what you're saying is that this is a wave 1 and a wave 2, this is a wave 3 and a wave 4, and this was kind of a very small wave 5. Now we're ending a very important cycle, right? I think what's more accurate is that this is a wave 1 and a wave 2. This is either another wave 1 and another wave 2, or it's a wave 3 and a wave 4. We don't really care. I think that all that really matters for Micron is that if we're above 65, which is getting a little wide, I think 72 would be a little tighter, and then this is a wave 1 and a wave 2 that formed. So if Micron, reverses between the 50% retracement to the 61.8% retracement, the 78.6% fib of 72 being a little wider, then this is a wave 1 and a wave 2. Micron will reverse and go on a wave 3 higher. All in all, the length of this rally placed at this low, I eventually expect will take Micron up to 121. I think the fact that Micron, Taiwan Semis, and Qualcomm have all just recently broken above very important highs, it kind of points to the fact that Elliott wave theorists calling for a crash, they can't just look at SPY, right? Because if Qualcomm just made a new high, and Micron just made a new high, and Taiwan Semis just made a new high, then is it possible that all of them were 1, 2, 3, 4, wave 5, and now we're going to crash? Sure. But I think a more likely scenario is that this is a large impulse in progress. This is wave 1 of wave 5, or wave 2 of wave 5, or it's wave 1 of wave 3 and wave 2 of wave 3. Either way, I expect that we're going to reverse between the 50% retracement to the 61.8% fib. A wider stop would be 72, and we're going to see that this is a wave 1 and a wave 2. Micron's going to go substantially higher. The length of wave 1 placed at the wave 2 low, ultimately, I think takes Micron to 121, it takes Qualcomm to 232, and it's going to take Taiwan Semis to about 208. So we'll talk about Taiwan Semis right now. The reason I want to focus on Taiwan Semis is because this chart, if I moved it like this, looks very similar to an ETF I went over last night called ASHR, an ETF full of Chinese stocks. And what I think that the market is going to do is it's going to reward savvy investors, maybe savvy traders who see that Taiwan Semis breaking above this high from February is an important leading indicator for stocks in the Asian market. So I believe that this is a wave 1 and a wave 2. This is a large wave 3 and a wave 4. So very similar to Micron, from an Elliott wave perspective, you're calling this to be a very short wave 5 and now a crash, right? And while that's certainly a possibility, I think a more likely possibility is that that was a wave 1 that formed from this low, and this is a wave 2 that's ending. So a little tight would be 115. That's not a bad level to stay above. And just like Micron, this is a wave 1 and a wave 2. Wave 3, 4, and 5 could take it substantially higher. Ultimately, the length of wave 3 placed at the wave 4 low and take Taiwan Semis up to 208. So that's Taiwan Semis. What I want to show is that let's look at this chart just visually for a second. Now let's look at ASHR. This is a huge index of Chinese stocks. And what I kind of want to show is that it looks pretty similar to Taiwan Semis before the base breakout. And I think that Taiwan Semis very quietly is going to be a leading indicator that stocks in the Asian market are ready to break above this February 15th high on the weekly chart. So very similar to Taiwan Semis, I believe that this is a wave 1 and a wave 2. This is a huge wave 3 and a wave 4 for ASHR. I'll make sure my fibs are correct. And I believe that what's going to happen is that this is a wave 3 and a wave 4. Very tight, we would hold above 35. Realistically, that's too tight. A wider stop would be 30. But I think what's going to happen is that ASHR is going to go break above this wave 3 high. and it's going to bring a lot of Chinese stocks with it. The length of wave 3 placed at the wave 4 low says that we're going to reverse. A very tight stop would be 35. A little wider would be 30. But I think that this is going to be the next kind of ETF that follows Taiwan semis above the February 15th high. What we're going to see is that this kind of sell-off has been a rotation into a few sectors, and I think one of them are going to be foreign markets, emerging markets, Chinese stocks, foreign stocks, really, even Japanese stocks. I believe this is a wave 1 and a wave 2. This is a huge wave 3 and a wave 4. So very tight, 35, a little wider, 30, but most importantly, I expect ASHR will follow Taiwan semis above the February 15th high. So here is XLV. I think XLV is a pretty chart. It gives on a low beta ETF, an important low to trade against for market bulls. So this is a wave 1 and a wave 2. On the larger degree, this is a wave 3 and a wave 4 that ended between the 23.6 and 38.2% retracement. So I believe from this low, XLV has formed a wave 1 and a wave 2. If we're above 124, XLV could once again be a bull's best friend. It's going to very quietly give a nice roadmap for the next leg higher if it occurs. And I believe that this is a wave 1 and a wave 2 from this low. That could take XLV up to 152 for a wave 3. Very interesting chart. A nice one to have in a bull's back pocket. If we're above 124, XLV going to 152 might be the only chart that bulls need. So very important chart. If we break below 124, we might have to ask some of the bears what's going on. This is a wave 1 and an ABC wave 2 for XLE. I think what's really going on is that we've seen oil hog all the money, right? We've seen big sectors like oil hog money from the rest of the market. Now, let's kind of remember that, because I think what could happen in the future, especially when we look at periods historically where the S&P, the NASDAQ enter a bear market in the second half of midterm years, what we could see in the future is on a bigger scale what we've seen from XLE in the past few weeks. I believe that XLE has been hogging money from the rest of the stock market. And I think that this could happen on a larger degree in the future, where growth stocks rally, Chinese stocks rally, even precious metals rally. And when huge sectors like that take off, they're going to hog money from the rest of the market. I believe this is a wave 1 and a wave 2, a wave 3 and a wave 4. From this low, this is a wave 1 and a wave 2. The next wave 3 target is between 66 and 68. So we're getting very close before a shallow wave 4 and a wave 5 higher. A lot of times that textbook wave 4 is a bull flag. So a lot of times wave 4 looks like this. Maybe what we can see is that XLE will digest some of these gains, and perhaps during that time we'll see tech hopefully get a little bit of an alpha back in the market. Here is ExxonMobil. Very similar idea, kind of showing that when entire sectors, big sectors rally, they hog money from the rest of the market. I believe this is a wave 1 and a wave 2, a wave 3 and a wave 4, ending between the 38.2 and 50% fib. So this is a wave 1 and a wave 2. Now we're going on this big wave 3. We got very close to the 161.8% extension, which was 75. Then we can see a shallow wave 4 bull flag before a wave 5 higher. Ultimately, the wave 5 target zone is aggressively 85, more conservatively 76. But I do think we're going to go a little higher. I think what we could see is that ExxonMobil and oil will form a little bit of a bull flag and digest some of these gains before the next leg up. If we look at Oxy's kind of a reason to not bet against oil right now because it just broke to a new high. So I think Oxy is a little different view of oil than what we talk about with ExxonMobil and XLE, where we're talking about a large wave 5 in progress. Oxy kind of shows how it might be more than a wave 5. This could be a 1, 2, 3, 4, 5 wave 1 and a wave 2. This could be another wave 1 and another wave 2, ending at the 61.8% retracement. Now we've broken this high. So the minimum Elliott wave expectation is that the length of this rally placed at this low will give a minimum wave 3 target of about 40. Now, if Oxy goes past 44 substantially, then that most likely is going to prove that this is a wave 3 in progress. After 44, we expect a shallow wave 4 correction before a wave 5 higher. So oil could continue to hog money from the rest of the market. So I wouldn't bet against oil. I think we're going to see that some stocks and ETFs that we call boring losers are going to be the only things giving alpha in the market. So if we look at Boeing right now, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So if I was a fund manager and I missed oil and I knew I have a report card to turn in March, I'd be looking at the airline sector. I'd be looking at the industrials, because I think what could happen is exactly what happened in the first quarter of 2021. The oil stocks rally first, and then the banks and the tanks, but mostly the industrials, the airlines specifically, follow. And obviously there's a connection between oil prices and airline stocks. What we saw last year was that first oil was the leader, and then we saw the airlines and Boeing kind of rally following that lead. I think this could be a wave 1 and a wave 2, and a large wave 3 is in progress for Boeing. So one of the stocks that could be getting rotated into, one of the sectors that could be getting rotated into during the sell-off, if this isn't the start of the crash, could be airlines and industrials. I believe this is a wave 1 and a wave 2. The wave 3 target is 363 before a shallow wave 4 and a wave 5 higher. A little wide would be 170 for Boeing. That's 78.6% fib. But I think that this is a wave 1 and a wave 2. Wave 3 can take Boeing to 363 before a shallow wave 4 and a wave 5 higher. Ultimately, I see a scenario where Boeing going above 400, even into the mid 400s, is just ending this blue wave 3. But more importantly, that would break above this kind of all-time high, kind of showing that this is a huge multi-year opportunity in the travel and leisure sector. Here is the airline ETF Jets. We look at Jets right now, very similar to Boeing, where if I was a fund manager and I didn't own any oil stocks and I had that report card to turn in March, I'd be looking at the airlines to follow. This is a wave 1 and a wave 2. I believe for Jets, this is another wave 1 and another wave 2. We're between the 61.8 and 78.6% fib. So a little tight would be 18, but I think the length of wave 1 placed with wave 2 low, and I think Boeing holding above 170 would be a supplemental level as well, can take Jets up to 33 before a shallow wave 4 and a wave 5 higher. This whole rally is from August to March. So 6-7 months. It's not crazy to think that the airlines could be dramatically higher in a wave 3, and the minimum wave 3 target would be 33 before a shallow wave 4 and a wave 5 higher. So let's see if we have the airlines follow the oil stocks into the end of the quarter. That's one thing that I'm watching. Another thing that I'm watching, this is kind of a pretty scary wave 2 correction for Camping World. I think that's a good thing. I believe this is a wave 1 and an ABC wave 2. This is another wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. Very tight would be 28. Realistically, that's too tight. The invalidation level that this is a wave 1 and a wave 2 would be 22. I believe the length of wave 1 placed with wave 2 low can take Camping World up to 57 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. The minimum wave 3 target is 57 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is at least the length of wave 1 placed with wave 4 low, Camping World can go all the way to 75. And in my opinion, that would just end this wave 1, wave 2, wave 3 from the March 2020 low. So that's Camping World. I think that there's a lot of boring stocks, especially in the dividend sector, they're getting a lot of money flown into them. So here is Disney. One good thing that we might have seen for Roku bulls that I kind of touched on last night, by the way, what I'm kind of thinking is that I talked about a lot of the ARK ETFs and the software stocks and the growth stocks last night. So I'll talk about clean energy in this video, but I covered really heavily ARK and growth last night. Here is Disney. I think one good thing for Roku is that Disney and Netflix and Roku have all sold off together. So they're all trading as members of the streaming sector. And this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Disney. We're at the 50% retracement. So I said that, well, I thought that Disney was still, a great opportunity here and here. But even if it got to the 50% and 61.8% retracement of 126, I would still be looking for this to be a huge buying opportunity. And I believe that it is. This is a wave 1 and a wave 2. We're between the 50 to 61.8% fib. So I want to see Disney above 126, but that 61.8% retracement, that's not a bad place for a wave 2 to end. We're entering this gap right now. But I would remind that the bigger picture for Disney says that something bigger might be at stake here. This could be a 1, 2, 3, 4, 5 wave 1 on the all-time chart. A 20 or 30 year wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. So if Disney goes and breaks above 203 at any point in the future, it will confirm it's within wave 3 of a larger degree wave 3. Just from the March 2020 low, this is a wave 1 and a wave 2. The minimum wave 3 target would be 262 before a shallow wave 4 and a wave 5 higher. But Disney and Boeing point to the idea that a bigger wave 2 has ended in the kind of larger degree charts. This is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. So the length of wave 1 placed with wave 2 low says Disney might not be a wimpy swing. It might be something a lot bigger than that. So that's how I'm treating Disney. It's a blue chip. I give blue chips special treatment. Here is Netflix. Netflix did kind of catch me off guard. Let's talk about Netflix right now. I thought I had this chart marked up, but what I do believe is going on with Netflix is that this is a wave 1 and a wave 2. This is a large degree wave 3 and a wave 4. And then this wave 5 that occurred ended a huge wave 1. So this is a wave 1, wave 2, wave 3, and wave 4. This is a wave 5 that ends a large degree wave 1. So I believe that Netflix looks something like this. 1, 2, 3, 4, 5, large degree wave 1. Now we're having a dramatic ABC correction that could be ending a very big wave 2 for Netflix. So Netflix did break below the wave 1 low, but it's still between the 61.8 and 78.6% retracement. There's a lot of blood in the streets right now for Netflix, and I think a lot of times what some Elliott wave theorists will do, they'll say wait for a wave 1 impulse to form and then use the wave 2 to trade against the wave 1 low. So we'll talk about what could be a setup on Netflix in the future, but this is kind of what I see. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction that is ending a large wave 2 near the 61.8% retracement. So if Netflix is above the 78.6% fib of 331, this could be a 1, 2, 3, 4, 5 wave 1 and a wave 2. So what some wave theorists will do, they'll look for a small degree wave 1 to form to trade against that low. So they'll look for a wave 1 and a wave 2, and then they'll look for buying this wave 2 against this wave 1 low. But I still think Netflix is at the 61.8% retracement. I still believe a very important wave 2 could end. Netflix can go rally and prove that this is a huge wave 3 in progress. A lot of times wave 4 is sideways, it's boring, it's a triangle. The deeper, scarier corrections are a lot of times wave 2 corrections that are preceded by large wave 3s that are actually bigger than this entire wave 1 rally. So above 331, I'm looking for Netflix to go make new highs, confirm it's within a large degree wave 3. It might take some time, but if we look at Amazon right now, Amazon kind of followed Netflix's breakdown. I still think that shorting Amazon is a bad idea. I think it could be very similar to Netflix, that an important correction is ending. In a more conservative view, this is a wave 1 and a wave 2. This is a wave 3 and an ABC correction ending wave 4. We're at the 38.2 to 50% retracement. So Amazon did break below this low of 2,871. So that invalidated the idea that a wave 1 and a wave 2 had formed from this low, and that a wave 1 and a wave 2 had formed from this low. On the larger degree, it is kind of breaking down with Netflix, but it's at the 38.2 to 50% retracement. This is where a wave 4 can end before a wave 5 higher. In a more aggressive view, Amazon could look something like this, where this is a 1, 2, 3, 4, 5 waves impulse like Netflix, ending a very important large degree correction. So if this is a 1, 2, 3, 4, 5 waves impulse like Netflix, then this could be a bigger buying opportunity than a wave 5 for Amazon. This could, like Netflix, be a huge wave 1 and a wave 2 that is formed, and we could get close to the 50% retracement, the 61.8% retracement, and see a big, very important wave 2 correction in. So very similar to Netflix. If Amazon is breaking down with Netflix, this could be wave 1 and wave 2, and this could be an important wave 2 correction that is ending for Netflix and for Amazon. So this is a huge wave 1 and a more aggressive view, and a wave 2 that is ending between the 38.2 and 50% fib. So the 61.8% retracement is a good level to stay above. That's about 2,446. If we reverse, and a Netflix reverses 2, this could be a 1, 2, 3, 4, 5 waves impulse for a large degree wave 1, and this is an ABC correction wave 2. So that means that this wave 3 would be larger than the length of this entire rally placed at the wave 2 low. So I want to see Amazon hold above 2,446. I want to see Netflix hold above 331. I think both of them could end very important corrections, aggressively very important wave 2 corrections before large impulses higher. I think one good thing, even if this was a wave 2 for Amazon, is that it is at the length of wave A, place of the wave B high, potentially being where a wave C ends. So that's Amazon. I think ONLN really gives nicer levels than what's on Amazon right now. Amazon's a huge holding of ONLN. If we look at this right now, what we could see is that O and LN will hold above 42, the 78.6% retracement, and it could be ending this huge wave 2 correction that we've been talking about for a lot of e-commerce stocks. So this is a wave 1 and a wave 2 for O and LN. This holds about 20% Amazon. This could be another wave 1 and an ABC wave 2 at the 61.8% fib. If we're above 42, the length of wave 1, place of the wave 2 low, can take O and LN dramatically higher. Even just getting above this wave 1 high of 93 would be a pretty substantial gain. I think right now I want to see O and LN hold above 42. That lines up with the wave 1 high. And I'm expecting that this is going to be the left side of the base, the right side of the base. We're going to see a very pretty base breakout. The classical traders will wait until this is doubled. But I think this is all a huge wave 1 and a wave 2. I'm expecting a massive wave 2 to end between the 61.8 and 78.6% fib. So that's O and LN. Here is Tesla. We'll talk about Tesla and Lee and XPEV. So, and NEO as well. This is a wave 1 and a wave 2, a huge wave 3 and a wave 4. So the most aggressive view for Tesla in the short term, I think Tesla's really going to help decide the path in the short term. The most aggressive view for Tesla is that this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. So very aggressively, very tight, Tesla will hold above 886. That is way too tight for a high beta stock like Tesla. But as of this video, Tesla has not broken below 886. If it doesn't, this could be a wave 1 and a wave 2. Tesla could go much higher into waves 3, 4, and 5. Ultimately, if this is a wave 5 in progress already, the length of wave 3, place of the wave 4 low, and take Tesla up to 1590. Now, what if Tesla breaks below this low? Let's play devil's advocate for a little bit. What if Tesla's correction kind of continues? What I could see is that Tesla really kind of helps find the pavement in the stock market if more blood in the streets continues. Because then, if Tesla does break below this low, then my expectation would not be that Tesla is ending a wave 4 correction and going on a wave 5 higher. My expectation, if Tesla does end up breaking below this low of about 886, is that it's going to end a very important wave 1 and wave 2. Then the length of wave 1, place of the wave 2 low, says that a minimum wave 3 target in the future could take Tesla to 1523, and that would just be a minimum wave 3 target. We'd have a shallow wave 4 and a wave 5 higher. All I'm trying to show is that if, big if, an if that I would not bet on, if Tesla does go below 886, it could help find the pavement in the market. Because then an ABC correction where the length of wave A, place of the wave B high, being where wave C ended, would be a great place for a wave 2 to end. This would all be a wave 1, this would be a wave 2, and Tesla's getting ready to go to the 1500s. But it wouldn't stop there, in my opinion. It would have a shallow wave 4 before a wave 5 higher. So I wouldn't bet on Tesla going below 886. And if it doesn't, it could be a more direct path to the 1500s. If Tesla does go below 886, the length of this wave A, place of this wave B high, could be where the floor is found in the market for a wave 2 before a large wave 3 rally. So that's Tesla. I want to see if 886 holds. If it doesn't, the 61.8% retracement of 813 is a nice place for a wave 2 to end. For a higher beta stock like Tesla, wave 2s kind of have to get a little wider stops of the 78.6% fib, which is 696. So in the very short term, I want to see if Tesla holds above 886. But if it doesn't, then this would help find the floor for market bulls in the future. So I wouldn't bet on this, but I just want to show what could be the floor in the market if Tesla does break below 886. That is not my primary expectation. That is not something that I would bet on ever. That Tesla's going to go take another marginal new low to 813. All right. It's always another low before another high. It's always another low before another high. Okay. I'm not really worried about getting called wrong on the internet. And I think that there's clearly a lot more upside in Tesla than downside. So the kind of conservative view is that Tesla breaks below 886, goes to 813 and explodes. I think maybe a more accurate, more aggressive view is that a very important wave 4 has already ended. This is wave 1 and wave 2. This is wave 3 and wave 4. So what this could be is a large wave 5 in progress. This is wave 1 and wave 5 and wave 2 and wave 5. Tesla's getting ready to go on a wave 3, 4, and 5 wave 5, significantly higher. So that's Tesla. It could help find the floor in the market if we go lower, but I wouldn't bet on that. So here is Li Auto. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. We broke above this high, so I want to see if Lee holds above 25, which is getting pretty tight. Then I'm looking for this to be a wave 1 and a wave 2. A wave 3 to 44 would be in progress before a shallow wave 4 and a wave 5 higher. Ultimately, the length of wave 1 placed with wave 4 low says that waves 1, 2, 3, 4, and 5 can take Lee to a new all-time high just for a wave 3 before a shallow wave 4 and a wave 5 higher. So we're getting close to 25. I think that XPEV is going to be a very important level for Neo and for Lee because it's a little further away from important invalidation levels. So XPEV has been a big leader in the Chinese stocks and in the EV sector. This is a wave 1 and an ABC wave 2. I believe this is another wave 1 and another wave 2. So a large wave 3 is in progress. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 that I'm expecting to take XPEV to 70. So a pretty tight stop for a high beta stock like XPEV would be 38. The wider invalidation would be this wave 1 low of 33. Above these levels, I expect this is a wave 1 and a wave 2. A large wave 3 to 70 is in progress before shallow wave 4 and a wave 5 higher. So just like Lee, the length of wave 1 placed with wave 4 low says just ending a large wave 3 can take XPEV to a new all-time high, showing that this could be a long-term IPO-based breakout. Very good for not only clean energy stocks and Chinese stocks, but also recent IPO stocks. XPEV is a nice holding of the IPO ETF. Here's Neo. So Neo is getting close to 26. So Elliott wave theories, they get to have stops too. If Neo breaks below 26, it wouldn't be the end of the world for bulls. I'll talk about QCLN and show where kind of a further level could be for QCLN. So Neo right now is between the 50 to 61.8% retracement. It has not broken below 26. If it does break below 26, then the Elliott wave bears are going to expect that Neo is ending an ABC correction. The length of wave A placed with wave B high says that Neo would go all the way down to 20 to the deepest it could go is 15. I don't think that betting on Neo going to 20 or 15 is a good idea, but I think that the 61.8% retracement kind of has to be respected because there's a little more room to the downside if Neo does go below 26. I talked about Tesla. If it did go below 886, it wouldn't have too much more downside before having a substantial rally. And I think that there's other stocks in the EV sector that support that idea. For Neo, I think that this is a wave 1 and a wave 2. So I want to see 26 hold, but even if it did go below 26, I'd ultimately be looking for a wave 2 to end. So there is room for Neo to fall if it goes below 26. So that's a very important level. Here is QCLN. Well, if Neo doesn't go below 26, let's say Neo turns around between the 50 and 61.8% fib and starts heading higher. Well, if that happens, then the length of wave 1 placed with wave 2 low says that a massive wave 3 is in progress. That could take Neo in the bigger picture to 93. So there's a lot of reward to the upside, and risk right now can be managed to the downside. But what I'm ultimately expecting is that this is the left side of the base, and we're going to see the right side of the base form. Not only are we're going to see a rotation in the Chinese stocks, but I believe that a lot of clean energy names are going to follow Tesla, Enphase Energy, and First Solar above the first quarter high from 2021. And I think Neo is going to be one of them. So I want to see 26 hold. There is room for Neo below 26. So I'm going to talk about QCLN, Enphase Energy, and First Solar. Here is kind of a very, we're getting close for QCLN to 53. So if 53 isn't broken, I'll explain my view. This is a wave 1 and a wave 2. This is a huge wave 3 and a wave 4 that is ended at 53. From this low, this is a wave 1 and a wave 2. So the 161.8% extension of wave 1 takes QCLN, which holds a bunch of Neo, Enphase Energy, and Tesla all the way up to 102, 103. Now, what if QCLN does go below 53? If QCLN does go below 53, I think that this would be a very great chart for clean energy bulls, for growth bulls to have in their back pocket. Because if QCLN does go below 53, it wouldn't be too far away that we would see the length of wave A placed at the wave B high be where a very important wave C ends for QCLN between the 50 and 61.8% fib. So a wider stop for an ETF full of clean energy stocks would be 44. Now, if QCLN does go lower than 53, then 50 to the 61.8% fib would be a great place for a very important correction to end. I don't believe that it would be a wave 4 correction in that case. This deeper, dramatic correction would most likely be another wave 1, and we're ending an important wave 2 if this occurs. So QCLN kind of helps to show even if we broke below 53, the length of wave A placed the wave B high would end a very important correction between the 50 to 61.8% fib. So that's QCLN. Here's Enphase Energy and First Solar. They're giving nice levels to clean energy bulls because they haven't broken these lows from May yet. Now, Enphase Energy has gone deeper than I expected, but I did predict that this was a wave 1 and a wave 2, and this was a massive wave 3. The only reason I bring that up is because if this was an impulse structure, then this is a corrective structure. And I believe this is a corrective structure. This is a wave 1 and a wave 2. We're below the 78.6% fib. If Enphase Energy is above 108, it's very similar to QCLN that it could just be being, tight for clean energy bulls. But this is a wave 1 and a wave 2. Ultimately, if Enphase Energy turns around at 108, just going above this high is over 100% return, but that wouldn't be the minimum expectation. The minimum expectation would be that QCLN and Enphase Energy go on dramatic wave 3 higher. The length of wave 1 placed at the wave 2 low could ultimately take Enphase Energy all the way up to 300 before a shallow wave 4 and a wave 5 higher. So above 108, there's a lot of reward for Enphase Energy, so that's going to be an extremely important chart for clean energy bulls. So First Solar is a very similar idea that this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. Very similar to Enphase Energy. They're making it tight, but they haven't broken below the May low yet. And I think Neo bulls are going to be very interested, and Tesla bulls as well, to see if First Solar and Enphase Energy break below these lows. If they don't, this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take FSLR up to 131 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low in the future could then take First Solar up into the 170s, much higher than the current level. So above 67 is getting a little tight just because First Solar has a high beta, but I think it's a nice level right now for a lot of clean energy bulls, a lot of Chinese EV bulls, even a lot of growth bulls to see, are Enphase Energy and First Solar going to break these lows? If they don't, this is a wave 1 and a wave 2, and it kind of shows there's a lot of upside reward. There's a little downside risk. So that's First Solar, could be a very important chart. Here's PSJ. I said earlier that my last video yesterday really focused on a lot of growth stocks. I actually included a lot of ETFs. I meant to include XLC and JETS, but I focused so much on growth that a lot of ARK and e-commerce ETFs made it in. I wanted to talk about a software ETF in this video. I believe that this is a wave 1 and a wave 2 for PSJ. I believe this is another wave 1 and an ABC correction ending wave 2 between the 61.8 and 78.6% fib. So if PSJ is above the 78.6% fib of 95, it's got two 5% holdings that could do quite well. One of them we talked about a lot yesterday, which was Roku. Another one we talked about in this video, which was Microsoft. If this is a wave 1 and a wave 2, ending between the 61.8 and 78.6% fib, then above 95, PSJ could go dramatically higher. The length of this rally placed at this low in the bigger picture could take PSJ to 223, but even just turning around and breaking above this high in 2022 could show that this is a massive base breakout. This was all accumulation. I think in the future, we are all going to agree that institutions were accumulating PSJ this entire time. Yes, even during this time before it fell. So I think that this is a wave 1 and a wave 2, and we're going to call this a very pretty base breakout above 187. And a lot of software names, in my opinion, they're going to already be gone by that time. So this is a wave 1 and a wave 2 between the 61.8 and 78.6% fib. That's the classic place for a wave 2 to end. We could see a pretty substantial turnaround for PSJ above 95. There's a lot of upside in an entire ETF full of software stocks. Here's Beyond Meat. Beyond Meat it's one of the stocks that's in a long list of growth stocks that could be putting in very important lows. Obviously, the bears are going to say that we're going to go below this low of about, we're going to go below these lows of about 48. The widest low would be 45, and that Beyond Meat's just going to, the 10s, I guess, or the 20s. I don't really think that's a good thing to bet on. This is a very heavily shorted stock, and there's a huge theme of growth stocks and a lot of even just sectors in general that did very poorly in 2021 that could get a large rotation in 2022 while the indices potentially are selling off. So we'll see if neglecting growth is in vogue at the end of the year or even at the end of the summer. I think Beyond Meat shows this could be a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. This company's announced partnership after partnership with Beyond Meat and McDonald's and KFC and Yum. What we could see is that this is a wave 1 and a wave 2, and this is going to be a big oh duh, right? Oh duh, Beyond Meat's in the 200s. It partnered with McDonald's. It partnered with KFC. But it's not oh duh right now. I believe this is a 1, 2, 3, 4, 5 wave 1, and this is a wave 2. If we're above 48, we're going to find out why the institutions want all the supply from Beyond Meat. That's because this is a 2 or 3 year IPO base. This is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. The length of wave 1, place of the wave 2 ultimately can take Beyond Meat to close to a new all-time high for wave 3. Realistically, wave 3 would go much further than the length of wave 1, place of the wave 2 low, before a shallow wave 4 and a wave 5 higher. So above 48, that's the risk. The reward is that this is a huge IPO-based breakout that's going to occur in the future, taking Beyond Meat just in the lower degree counts to a new all-time high, significantly higher than the current prices. But that wouldn't even be the biggest deal. The biggest deal would be that would confirm this is a 2-year, 3-year even IPO-based breakout. So higher risk, higher reward for more recent IPO stocks. Let's talk about crypto. I've been talking about crypto for a long time. I really have. This was when I was really tweeting in all caps about crypto, and it exploded. My original target for Bitcoin was about 22K. And volatility, especially in crypto and growth, they're kind of the price that investors pay for long-term gains. What I could see for Bitcoin is that this is a 1, 2, 3, 4, 5 huge wave 1 and an ABC correction ending a massive wave 2. And what this could be is another wave 1 and another wave 2. This certainly is fitting the bill of a scary correction in crypto that is a dramatic wave 2 before a wave 3 or wave 3. The length of wave 1 and place of the wave 2 low could take Bitcoin to about 77K before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1, place of the wave 4 low, Bitcoin can go to 109,000. What we can see maybe in the future, when we look back, we can say, oh yeah, that was the biggest bear trap that we've seen in crypto in a very long time. I suspect that's the case. And I don't want to be the guy who calls everything a bear trap, but it is a very important option expiration. There's a broad theme. I talked about ARK-F last night. I talked about Square Cash and PayPal a lot. That eCash could come back in vogue. Growth in general could come back in vogue. I believe this is a wave 1 and a wave 2. I believe that Bitcoin, Marathon Patent Group, Hut Mining, even Ethereum, going and breaking above these highs that they formed in the second quarter of 2021 were a leading indicator that a lot of other cryptocurrencies that haven't yet are going to follow. I believe this is a wave 1 and a wave 2. The length of wave 1, place of the wave 2 low. The next minimum target is 77K, potentially before a shallow wave 4 and a wave 5 higher. So if Bitcoin's above 28.9K, and obviously Ethereum is going to be an extremely important chart for Bitcoin, then getting to 109K in the future would just complete this red wave 3 before shallow wave 4 and a wave 5 higher. So we can see in the future why they would really want to get retail out of crypto, why they would need to trap a lot of bears. And I think we're above 28.9K. The risk reward is there. This is all a huge wave 1 and a wave 2. This is another wave 1 and another wave 2. The length of wave 1, place of the wave 2 low, and make Bitcoin much higher just for a wave 3. And from a timing perspective, this is from June to November, right? That's a 5-month rally potentially, a 6-7 month rally more conservatively, but wave 3 is stronger and faster than the length of wave 1, place of the wave 2 low. And if we see that this is Bitcoin, right? It's a very high beta stock. If it begins wave 3 or wave 3, it's not going to stop at 77K. It's not going to stop at 76K. It's going to overshoot this for wave 3, have a wave 4 and a wave 5 higher. If we look at Ethereum, it's another important stock in the crypto sector. I think right now Bitcoin above that low of 28.9K is important. I think Ethereum kind of shows what a more close-up view of crypto could be, that from this low, this is a 1, 2, 3, 4, 5 wave 1. This could be an ABC correction in wave 2 between the 61.8 and 78.6% fib. So if Ethereum, extremely tight, right? You can't have a $300, $200 stop on something that has an extremely high beta like Ethereum. But I believe that this is a wave 1 and a wave 2. The length of wave 1 places the wave 2 low can take Ethereum to about 5.7K. So right now, Bitcoin might have better risk reward because it's a little closer to this wave 1 low. But for Ethereum, the widest level would be 1.7K. extremely tight would be 2.3K, but that's realistically too tight. So I think for Ethereum, Bitcoin above 28.9K is going to be the best downside level. This is a 1, 2, 3, 4, 5 wave 1, and likely an ABC correction ending a dramatic wave 2 between the 61.8 and 78.6% fib. I'm looking for Ethereum to go break above its high above 4.8K and prove a massive wave 3 is in progress. If that's the case, like Bitcoin, 5.7K would be a minimum target. We'd have a shallow wave 4 and a wave 5 higher. So down the road, if wave 4 retests the wave 1 high, wave 5 is at least the length of wave 1, places the wave 4 low. It sounds crazy, but Ethereum going to 8,000 is not crazy. And I think that if it's above 1.7K, I think if Bitcoin is above 28.9K, the risk reward is there. This could be the last time to get into crypto before the path to 100K